All right, let's get right into it. We're going to tackle one of the biggest questions out there for anyone even a little bit curious about crypto. And we're not just going to talk about it, we're giving you a real, actionable blueprint. So let's say you've got $1,000 set aside. You're ready to dip your toes into the crypto world. The big question is, what do you actually buy? What's the smart play here? That's exactly what we're going to break down. And look, this is not going to be some random list of hot coins to gamble on. No way. Think of this as a real strategic blueprint. It's your educational starting point for what might just be a huge technological shift. Oh, and you're definitely going to want to stick around till the end. I promise. Because that's when we're going to drop the single most important rule for protecting that investment. Seriously, you do not want to miss this part. Okay, let's dive into the blueprint itself. It's all built around a simple philosophy, which is exactly what you need in this, let's be honest, kind of complex world. All right, here it is, plain and simple. We call it the 50-30-20 portfolio. 50%, that's 500 of your $1,000, goes into Bitcoin. 30%, or $300, goes into Ethereum. And that last 20%, the final $200, is going into Solana. Easy enough, right? But the magic, the real genius here, is in the why behind this split. See, our whole strategy is built on 3 key ideas, 3 pillars. First, you need a solid foundation for resilience. You need something proven. Second, you need an engine, something that powers growth and actually does things. And third, you need a venture. That's your calculated bet on some really high upside potential. So let's break down what each of those pieces actually is. First up, the foundation, the absolute bedrock of our portfolio. Half your capital, that $500, goes right into Bitcoin. And listen, for someone just starting out, there is simply no better, no safer place to begin your journey. So what is Bitcoin? Well, the easiest way to wrap your head around it is to think of it as digital gold. And hey, don't just take my word for it. This isn't some niche crypto idea anymore. When you have this CEO of BlackRock, Larry Fink, we're talking the biggest asset manager on the planet, coming out and calling Bitcoin a legitimate financial instrument, that's a huge signal. That's a massive shift. But here's the thing. Bitcoin is like gold, but with a 21st century upgrade. Think about it. Gold is scarce, yeah? But we can always find more, right? Dig it out of the ground. Bitcoin, it is absolutely finite. The code dictates there will only ever be 21 million. Period. End of story. And try moving $1 million in gold across the planet. It's slow, it's dangerous, it's expensive. With Bitcoin, you can send it anywhere with an internet connection in minutes. Plus, you can't just go and check how much gold exists in the world. With Bitcoin's public ledger, anyone can verify the entire supply right now. That kind of digital certainty, that transparency, that's a game changer. Okay, on to the next piece. The engine of our portfolio, Ethereum. This is where we put our 30%, that $300. And if Bitcoin is our digital gold, our store of value, then you should think of Ethereum as this bustling digital city. It's the place where stuff actually gets built. And the magic behind this digital city, it's all thanks to something called a smart contract. Now, the best way to understand this is to picture a digital vending machine. It's perfect. You put your money in, you press the button for what you want, and bam, the machine gives it to you. No cashier, no middleman, it just works. Well, smart contracts do that for everything from loans to trading to buying digital art. They are just code that automates trust, cutting out the need for a bank or a lawyer in the middle. It's pretty profound. Now, Ethereum had this grand vision at first, to be the single world computer for everybody. But it kind of became a victim of its own success. It got so popular that it became slow and really expensive to use. But here's the cool part. It didn't break. It evolved. It's now become this ultimate global settlement layer. Think of it like the main, super secure foundation, the supreme court of the digital world. And then you have these other faster networks called layer 2s that do all the busy work on top of it and then report back. This whole setup makes the entire ecosystem way, way more powerful and scalable. Okay, let's talk about our last piece of the puzzle. This is our venture bet. It's the high risk but also high reward part of the plan. This is where we're putting that final 20%, our $200, on a serious high-speed challenger. Solana. So you might be asking, why Solana? Why not something like Avalanche? Well, it all comes down to its core design philosophy. Solana is making a really big bet on a single, monolithic, hyper-fast blockchain. The entire goal is just raw, unadulterated speed. And that speed leads to insanely low fees. We're talking fractions of a penny per transaction. Now, what's the catch? The trade-off, and this is the key risk, is that the network has had some stability issues in the past. So this is a bet. It's a bet that they're going to solve those engineering hurdles. So how does it get that speed? Well, Solana's secret sauce is this incredible piece of tech called proof of history. The best way to think about it is like a super fast, verifiable, cryptographic clock built right into the blockchain. It puts a timestamp on every single transaction before it even gets processed. And because everyone can agree on the exact time and order of events beforehand, the network can just blast through a ton of transactions all at once. That's where its mind-boggling speed comes from. Okay, so there you have it. Bitcoin, Ethereum, Solana are 3 assets. But I need to be crystal clear about something. Knowing what to buy, that's only half the battle. Seriously, knowing how to invest, how to manage your risk, that's what separates a smart investor from just a speculator. This is so important. Please do not take your $1,000 and dump it all in at once. That's a rookie mistake. Instead, you're going to use a tried and true strategy called dollar cost averaging, or DCA. It's simple. You invest a set amount of money on a regular schedule. So instead of one big investment, maybe you invest $100 a week for 10 weeks. Why? Because it smooths out the crazy price swings and, this is the most important part, it takes the emotion out of the game. You're not trying to perfectly time the market, which is basically impossible, and you have got to go into this with your eyes wide open. A few essential warnings. 1. This market is wildly volatile. Never, ever invest more than you are prepared to lose. 2. Be skeptical of everything. If it sounds too good to be true, I promise you it is. Scams are everywhere. 3. There's no safety net, no government protection like you get with a bank account. And that leads to the last point. In the world of crypto, you are your own bank. Security is 100% on you. And that final point, you are your own bank, brings us to the big one. The single most important rule I promised you at the beginning. It is the absolute #1 cardinal rule of crypto. You need to burn this into your brain. Not your keys, not your coins. So what does that actually mean? In simple terms, it means you can't just leave your coins sitting on the exchange where you bought them. For any crypto you plan to hold, you need to move it to a hardware wallet. Think of a ledger or a Trezor. These little devices store your private keys, which are basically the master password to all your funds, completely offline, away from hackers. This isn't just a good idea, it is absolutely non-negotiable if you're serious about protecting your investment. So at the end of the day, that $1,000 is really more than just an investment in 3 different digital assets. The best way to think about it is as your tuition. It's the price of admission. It's an investment in your own education about what could be the future of money, finance, and the internet itself. So as you get started on this journey, just remember this one last thing. Watching the price go up and down every single day, that's just noise. Don't get caught up in it. The real signal is the long-term technological trend that's unfolding. Your education is just beginning. So the only real question left is, are you ready to start learning?